needs another minute here to log in before we kick off today's presentation. So I'll ask you to hang on here for just another minute. Hello, everyone, and welcome. I'd like to thank you for joining us today for our TradeSmart webinar, Epic Returns Aren't Just for the King. I'm your host today, Karen Kurzweil. Today's presentation will be a 30-minute look at case studies on trade spend and how TradeSmart can take your ROI from average to epic. If you are interested in a full demo or a deep dive into this application, please contact me after this session, and I'll be happy to schedule a follow-up one-on-one for you and your team. We will be recording today's webinar, which will be available for you on our YouTube channel as well. A few reminders before we get started today. First, we have enabled chat, so please feel free to ask questions. And given the short time frame, we'll address those at the end. Second, we have muted all participants, but we ask that you also hit mute on your line to avoid any interference. Our presenter today is Christy Gary. Christy has over 16 years of experience in the CPG industry, working with multiple retailers across various CPG segments, including direct store delivery and warehouse delivery. She's worked for beverage companies, food, accessory companies, and is an industry expert in this space. We like to call her our resident guru. A fun fact about Christy is she also loves turtles. With that, I'll turn it over to Christy to kick things off.
Thanks, Karen. The goals for today will be to define a data repository, the challenges of the current state and the benefits of having an ideal state, review the TradeSmart architecture, and then the bulk of our time will be spent looking at the case studies. So first, is this your data repository? I've heard from a lot of our clients that we've got that, or our analysts can go get what they need. You know, typical questions in departments I've worked in is, you know, has anybody seen that Walmart sales I saved off from last year? Is it at the store item level by day, or did I archive that over there by week? Has anybody downloaded the master item stuff lately? You know, has product development included UPCs in our item files, or is it complete? When was the latest IRI or Nielsen data sent to us through? So what's the latest we can look at our analysis? Have the sales folks added anything to our promotion records? Did they have an opportunity to put a circular ad in, and that was an additional layer in a promotion? Have the shipments been reconciled in the system for the end of the month financial reporting? Has purchasing updating costs in the latest raw material price increases? You know, hey, did Kroger really run that promotion as they planned? I heard there might have been a truck delay and their order didn't get to the DC in time. How many selling units of that item were on display? So we ship out displays, but how many consumer eaches are there? And then whose calendar should we use to do this? Is it corporate, you know, CPG manufacturers? Is it the retailer's calendar? Should you leverage the syndicated data provider's calendar, which, you know, may have shifting rules based on different retailers? So are you comparing apples to apples, and how do you get to that level? You know, where in the vast expanse of the shared drive will I find this information? So how much time today are your analysts spending finding the information, playing data detective? And then, you know, if you're using varying calendars or different levels of granularity, they're spending a lot of time figuring out whose data and analysis is correct and accurate. So, first thing you need to do in any reporting environment, in any analytical environment, is to gather all the pieces. So I like to look at this like the old game of perfection. Can I get all the pieces in place before the timer goes off and we have to go ahead and make gut decisions? So in completing one report, how many pieces of information does the analyst have to bring together? How long does that take to get all of those pieces of information gathered? And what's the data telling you? Are you completing templates or are you bringing insights? When questions come up outside of your regular reporting, can they be answered? Can they be answered in a timely manner? How long does it take to answer those questions? Does your sales team often have to go rogue and make gut decisions because they have a question but it can't be answered and compiled in a timely manner? And then how much money does your company spend on data acquisition? So we go back to we have that. It's kind of out there in the dumpster, the shared drive, or we've got that. Every team collects their own customer data. But between collecting the data and spending the money on collecting the data, how are you using the data to make business decisions that will drive growth and profitability for your company? So a nice example down here is, a weekly sales template that your buyer might ask you to complete. How long does it take to compile all this information? And then once you have this together, you notice in subsegment 6 here, you're down 64% year-to-date versus last year. Am I happy or sad about that information? If that's a product line that I've discontinued or I've lost distribution on, or competition came into the area, how do I know that? How do I know, how to go about explaining that to my company and to, really driving growth? So the real way to do that is to bring in an enterprise architecture. So we talked about having all of these sources. You may have retail link data from Walmart. You might have some Delhaize data from Food Lion and Hannaford, some club data from Costco. You might have Kroger data from Market 6 and some Dunnhumby loyalty data. You may have other retailers like Home Depot or Lowe's that may have to be integrated, or distributor data, along with your forecast shipments and promotional records, your ERP systems, and then these may be coming over in many different file formats: EDI, text, retailing, sometimes Excel spreadsheets, pulling information from partners online from Target or Workbench from Kmart. Or you may be using just third-party data like IRI or Nielsen just to pull weekly sales data by retailer or marketing area. So how many of these sources do you have today? And are they just out there that those customer teams are able to get you the Walmart data or the Kroger data, but is it integrated? So the benefit of TradeSmart is the underlying architecture. We take the variety of sources, integrate, validate, synchronize, and manage those into a single stack, and then put them in logical business layers, so TradeSmart sits here, and feed your reporting so that everyone's looking at the same harmonized calendar, the same item information. So it's not the Walmart items mentioned, it's not the Kroger items mentioned, but how your company looks at your item structure. It's at the same level of granularity. So you may ship in pallets and cases, and you sell in UPC eaches. It takes the data and breaks down your shipments to the each level. You may roll that up to a common case, but then you'll have to treat your sales data the same way. And you might be looking at bringing the promotional records, from the promoted group and the collection of UPCs that make up that promoted group as one bucket of data. The fundamentals of the architecture requires an incremental approach, which leads to overall data consistency. There's a staging area that's required in order to bring the cross-reference data and integrate and synchronize everything at the same level. If you're familiar with what a star schema is, that's what is required to feed the databases. And we architect everything before the reporting cubes are loaded. Business rules are defined and agreed upon up front. And then this will become your one source of the truth. It's the single source of information. And then looking at what the sound architecture is, it doesn't look like the dumpster. It looks like harmonized data at the same level of granularity. So with TradeSmart, the heavy lifting is done. You take all of the complex data sources, put it through the integration engine into the TradeSmart data model platform, which feeds your dashboard and your reporting. So you can easily look at ROI across multiple product groups, retailers at once. Look at the lift, your margin and contribution. All of the promotions are fully aligned and accurate. And you have the one truth database. And data comes in, if you have daily data, you can look at it as of yesterday. If you have weekly data, as of the last closed week. So it's really, as it comes in, there's no latency. And once you have the heavy lifting done, which is what TradeSmart offers you, your analysts are saving lots of time by not having to go out and find the data and looking at the reports and improving on the reports so they can draw insights. That's what I would call trade promotion intelligence. You now have a central repository, the ability to leverage the enterprise architecture. It's all automated, integrated, and harmonized, where the plan, shipment, and consumption intersect and how it relates to the trade promotions. It's your ability to accurately analyze the outcome of trade promotions, not analyze all the different sources of the data that you have to put into a template, but the outcomes. How did you do? And it increases your coverage across all retail segments and product categories. The ability to understand whether or not your promotions were properly executed and the amount of retail compliance. So did the retailer execute as planned? Did something happen that meant that it didn't go out at retail as expected? And then the common repository. If you're using Excel spreadsheets today and you have a spreadsheet per customer and product promoted group, where's that single source of the truth that enables multi-year analysis? By having this common repository for all your historical promotions will enable you to see, if 2 for $5 that you go out with year after year after year slowly starts to erode, and that's the new price that consumers are expecting, you're no longer getting the lift you expect to get from that. And it offers the ability to feed other systems so that you can feed your planning, supply chain, your predictive analytics, and merchandising systems. Now, how do you know if you have a trade intelligence system? First, it's rule-based. It allows for your streamlined process. It's not going rogue. Not every team doesn't have different rules. As an organization, we've agreed that this is the way that we look at trade. It's process-driven, so it's very repeatable. Gives you insights into planned spending and what happened up the hierarchy. Uses cost information to understand the manufacturer's margin and margin contribution. A lot of competitors in this space would be just looking at retailer margin on retailer profitability, but what we're trying to help you with here is win-win scenarios. It'll provide visibility to your historical pricing, which will protect against margin erosion, and help you know the sell-through, not really sell-through in an everyday business, but how much of your volume are you shipping out at a discount, and is the retailer pulling through that, or do you need to reduce the amount of shipments you're making or discounts you're giving on those shipments to make sure you have the freshest product in the stores for the consumer, and you're not subsidizing. So the first step in the TradeSmart application would be to use the Promo Pro to fine-tune your promotions. This enables you to group your promoted pack groups into events to create your consumer-facing event at retail. It allows you to realign your dates and events to align with what happened in sales. So the best laid plans don't necessarily happen in execution. So being able to tweak those dates and, something was supposed to start July 1st and it didn't really get out to the stores till the 3rd, you can adjust that date. Maybe you have to group it to 2 weeks then because you had some great lift or the shipment got in there late. It gives you the ability to override your base and incremental by event. So a lot of the syndicated providers, after 7 weeks of a price reduction, that will become the new price, and so the incremental value disappears. So this allows you, if you have a promotion that runs longer than that, to adjust your base or, as you look at it and feel that's not quite right. And what we do in the architecture is allocate spend to units. So in order to not double count the units sold, the spend has to go against the unit. So here is an image of our Promo Pro application, which brings together consumption, shipments, promotional records into one interface so that your trade marketing analyst can easily look at all the promotional records, group them into event type, and move them into consumer-facing event while looking at, the classic bump chart here, so your sales lift and price reductions for yourselves and competitors. And then a nice Gantt chart at the bottom to show you when things have been running. And then within here, you have the ability to override your average weekly base and see the impact on incremental and your dates for both consumption and shipments. With that, let's get into some case studies. So the first one here, the marketing teams have completed aligning all their events, and they want to see which ones have the best ROI. So the post-promotion template report with traffic lighting is needed to easily compare the aligned events against each other. So as you'll see here, this is the Blue Sky post-promotion analysis template. It displays each event with all KPIs. It allows for total retailer promotion review across categories or total category promotion review across retailers. In this specific example, we're looking at Publix for all of their product promoted groups across time. And the picture here is not exhaustive, but it's the way that once everything is grouped and aligned, you have all of the information with all your KPIs and measures in one place. And you can view, like I said, all categories for one retailer, all categories for all retailers, all of one category across all retailers. And just some of the key measures and KPIs, down here. You have, how much was consumed, what your case rates were on, for each different thing, your lump sum, total spend, if any account-specific marketing was in there, what you expected to spend, how many promotional weeks you have, the average weekly base cases that you're selling, the non-EDLP base, your incremental cases. So getting that base and incremental is key in order to truly get to your ROI. And looking at percent lift and ROI dollars and ROI break even. Incremental EUs are very important as well, because if you're going to look across product groups, not everything is at the same size. So like this item here is an 8-ounce versus a 16-ounce. It'd be important if you're going to compare across to look at the equalized volume. The next case study, we have the marketing team. Like to see which events have the best list and achieve the best ROI. So a report charting those two measures is needed to quickly visualize how lift and ROI are related. So if we understand what lift is needed to achieve a positive ROI by looking visually at the chart, view which events achieve the best lift, and quickly identify which ones need to be looked into further. So instead of trying to gather all the information, having a visual will say, I need to go look at these 3 events in more detail. These 3 promotions had no lift and only one had a positive ROI. And it appears that this Family Love Chicken and Rice 8-ounce, had just a few promotions this year, but for the most part, they were not performing well. So further analysis on this product group would be needed in order to determine if you're going to continue to run product. Also looking, seeing where your lifts come into place. If someone were to come up and say, hey, we need to drive sales in this category, and you need to get a specific lift, you can quickly see where your lifts are, and then put that type of promotion back out there to get the same lift. The next case study here, the marketing team has been given additional trade funds to use this year. They need to determine which retailer and promoted group would bring the best return on investing those additional funds. The ROI ranking report is used to review all promotions executed to date and which ones could be repeated to drive sales. You can rank your promotions across time, retailer, and promoted group to find the best ROI. Potentially one brand team might have extra money that they want you to reinvest, and you can then filter this report on that brand and look at all the promoted groups and retailers and events that have been executed to focus where to spend your incremental trade funds to drive volume. Again, very important to note on this one that we're looking at incremental equivalized units and spend per equivalized unit. And the importance of that is to show we're looking at a variety of different promoted groups at different sizes. So it is instrumental to look at equivalized units in this case. And we're looking at lift and ROI percent, including the ROI dollars and the total spend. And this report can be filtered or, run for specific promoted groups or specific retailers where the funding may be available. Case study 4, the category team is presenting its trade promotion results to the retailer and needs to understand which promotions are working best and which ones need adjustments. A report with traffic lighting is needed to easily identify those areas. So understanding the ROI for wholesaler and retailer, knowing the events that are working for both, and creating those win-win promotions. So you see here the win for the retailer, they had a 24% increase, but the supplier lost 6%. These here, winner for the supplier, but not for the retailer. So unless you're looking at positives for both the retailer and supplier, it's probably best not to bring that up to your retailer because they're not going to want to run those things again. The next case study here, marketing would like to determine whether having a product on promotion cannibalizes other products in its category. In order to do so, a classic bump chart is required, which will show both volume and price. You have the nice bump chart here with your category and the other item, with your item and the other items in the category, and showing where price declines and volume increases. And then looking here, this one shows that blends are cannibalized when biscuits are promoted. So how does price impact the volume? How much of a lift are you getting when you're promoted? And then understanding your cannibalization across brands. So if you have, multiple brands in the same category, it's critically important for you. But when you're talking about joint business planning with the retailer, you need to make sure that you don't grow your sales at the expense of the category. Next case study here, trade marketing team is spending days and days just to produce reports that show how few of their promotions are performing. They cannot get an accurate number because they can't group events. They have coverage of only 10% and have no idea how the other 90% of promotions are actually working. Like I said earlier, we have one customer that discussed with us the savings of 40,000 man-hours from the data collection, where they're now putting those man-hours into improving their trade events with the insights gleaned from the reporting and having a much higher coverage factor. So this event alignment report quickly identifies which promotions are effective and which are not. You have your base and incremental volume by week, your plan versus actual, what your growth looks like and profitability, the gain and loss, and your return on investment. So base volume plan is consistently lower than actual, so forecasts need to be adjusted to reflect a more realistic sales projection. Event in the week ending June 2nd came closest to hitting their planned targets, despite incremental plan being off 15,000 units. Overall events are generating sales gains and positive ROI, which is very great. As we're looking at this as well, we're looking at what can go into a time series repository. So you don't necessarily have events every week, but you have the opportunity to sell your product every week. So it'd be matching up your trade spend to the unit to look at, at the end of the year, total customer profitability as well. Next case study we have, trade marketing wants to evaluate how their promotions impact the retailer's category sales. Promotions that are a win for the manufacturer but don't grow the category will not be considered a win for the retailer, so a weekly trend report is needed. So we have trending dollar and volume sales for the 52 or 53-week period to see what effect your events have on the retailer's category sales. So to watch your share change each week depending on your promotion and looking at the impact of the total category. So the first column here would be your share of units and dollars, and then the total total category, Last case study, marketing believes competitive activity is eroding their promotional performance. To evaluate if competitors are running promotions at the same time your promotions are running, a category activity report is needed. There are retailers out there that run all the products in the category at the same time, effectively negating any promotional lift you would get. So Blue Sky category activity report is needed to look at your products and the tactics at retail and the competitive products. We typically will suggest the top 5 competitors that you'd want to look at. So when you're on promotion, are they also on promotion? What is the spend and your consumption volume? What's your ROI? And then how does it impact if the competitor is running at the same time you are? So nice visual tracking. I like to think of this as the proverbial marketing Gantt chart, but it has numbers in there overlaid on top, which is great. What tactics are planned? Do competitors run activity in parallel? How profitable is each event for you? And this helps to identify, we may have the same feature ad, 2 for $5, running in multiple weeks, but if the competitor's on deal at the same time, does our ROI suffer? So what do we do now? We understand we have that, but we may not have it in a usable format. So what do? We evaluate what your needs are. We look at your annual trade spend budget. We discuss with you, or internally you can start to look at what's your company's commitment to improving your trade spend ROI. You have to look at how much time is spent today evaluating trade spend. How much coverage do you have? Can you possibly get to everything? Can you imagine that in your life today? And we would start with a roadmap. The roadmap, understanding your current methods. So we would come in and talk about the current state reporting, how you're gathering your data, the number of users you have, how experienced your users are. So again, if 90% of the analyst time is spent gathering data, initially there's a lot of training into what is the information now telling me that I have the report put together and I have more time to digest that. Building some consistency among your team on metrics. Looking at how many promotions you have and what your trade spend is, how available you have historical data, and do you want to start from this point going forward, or do you want to look historically and build up the repository in the beginning? The level of granularity that your data is available for. So, look at consumer units. They're going to roll up to some level of cases. The type of data that's available, so plan, consumption, shipment, cost of goods sold. And then, believe it or not all departments have the same secret decoder ring, so we level set the language so that sales, category management, finance, IT, and trade are all speaking the same language. And then understanding that that language may slightly vary for each retail partner. So our next suggestion would be to go ahead and start with a roadmap. Looks like we have a few questions today.
Christy, it looks like our first question here is, how do we know if we're ready for this type of solution?
I would say the first thing you would do would be start with a roadmap and determine how ready your organization is and how committed you are to improving your trade spend.
Next, they want to know, is TradeSmart hosted?
So TradeSmart can be a hosted solution, which would mean that it would sit in our data center behind our firewall, and the client, the CPG company, would access that through the web through a smart client. Or it can sit in their data center behind their firewall, either way.
Next, they're saying that they don't have a good baseline. Do we offer a baseline calculation?
Yes, we do. We do have a baseline calculation. Some customers start with a finger in the air, kind of a this is what IRI or Nielsen are saying, or we just have this gut feeling. Here at Relational, we do have our own algorithm that we put through, and you could also use your own if you'd like that better.
Do you use actual PLS data or IRI or Nielsen?
We can use either. IRI and Nielsen are at the typically at the banner level by week. So we just want to make sure that if we're using a mixture of the data sources that we roll up to the same level of granularity, or that for customers that you want to go down to maybe store day level, that we have the ability to not lose that.
And lastly, I think we only have time for one more. If they want to know if you provide customized reporting.
Yes, so absolutely. We had, went through 8 examples today of what, has been done, but we absolutely customize reporting based on your needs. So that's part of the engagement, part of the roadmap, figuring out what you need and going forward from there.
Excellent. Thank you, Christy. That was some very insightful information that you shared. We wanted to thank everyone for your time today and invite you to follow our Relational Solutions training blog by going to our website at relationalsolutions.com. We do regularly post updates and industry information on LinkedIn under the Demand Signal Repository Institute. Today's training video will be posted on our Relational Solutions YouTube channel. And we ask you to stay connected by following us on Twitter and Facebook. You are welcome to call or email myself or Christy with your comments, questions, and feedback. We look forward to hearing from you. Thanks again, and have a great day, everyone.